Welcome back to besttradingsignals.net. This is the OMNIPOPS explained series example, and we're back here on the caterpillar example, and I want to also give you a picture of the performance in perspective. Now, of course, that was a very nice day with a 16, nearly 17 point gain on very cheap in the money, high delta, short-term weekly options. Now we use those again on purpose, and we link them to the system. We're not just buying cheap options to sound cool, right? In the past there were educators out there who sounded like they were very sophisticated and smart, talking about options and how they buy cheap options. Well, what does that mean? You just kind of find a cheap option and just buy it and hope it goes in your direction and goes in your favorite direction significantly by expiration. That's what was implied, and it's really pretty stupid, isn't it? Think about it. You just kind of rolling the dice on this option with no direction, intention, with no probability factors or reasons why you picked that direction other than you had a special feeling, right? So, now, okay, you could say, well, I'm going to buy this cheap option as an investment. And options back then were cheaper, okay? They had less greedy premium on them like they do today. And so you could buy options that were pretty low in price with decent deltas, pretty far out in time. So if you bought that cheaper option as a type of stock investment type of concept, okay, so there's a little bit more to that, whereas you're anticipating better performance of that stock over time because it's a chronically bullish stock, and maybe you anticipate some good things to come on the short term and you just want to give it some time. All right, there's a little bit more logic to that, but then again, what's it actually doing? Are you buying that cheap option at a trend cycle high? Are you wasting your time buying at some sort of peak? You can use price charts to enter into trades more intelligently. So here we're just taking a one-day trade, and that's it, right? Why? Because that's what the system is designed for. It's not even designed for the sake of taking a one-day trade. It's just the opportunity that is within the one-day trade, in that we get in and we get out. We capture the momentum. We capture the market reaction for a one-day momentum drive, and we lock it in. All right, so we're not trading. We didn't develop the system just to take one-day trades because it sounds neat or something, right? It's the opportunity we're targeting because it's there consistently on the price charts. So then we design the system to take advantage of that consistency, that certain repeated consistency of action and reaction in the marketplace. Now, that doesn't mean you're going to win 100% of the time for some of you younger guys out there. But anyways, we look to have a system that has a good, solid, repeatable probability that has had this action and reaction scenario to a good, solid winning percentage over time, right? Because we hope that that consistency on average is going to perform in a similar way over time on average. That also brings up the point in that a lot of people get into signals and they go by their emotions, right? Or they go by their feeling. If one day they're kind of wanting more excitement and there's no trade, or maybe that week had wasn't moving much in the markets and you weren't getting the exciting follow-throughs and this and that. They just say, oh, this is not doing much, and they quit. And then what usually happens afterwards? Well, the market cycles into a more active cycle, and that's just how it goes. With the markets and people's feelings, you have to be highly strategic with the markets. The markets are a battlefield. They're not going to make you happy. Okay, you may have some happy surprises like this cat example up here, where we turned calls from 2.91 into 18.51 or 18.23 actually. Mistake on the screenshot. And so we had this score for a huge gain. Didn't even do the calculator on this one. Let's see. Uh, 18.51 divided by 2.91. So a six-fold return. 600, we'll call it a 600% return. That's pretty sweet. Now that's a nice day. But you know what? Look, that's a nice day too. And that's a nice day. And that's a nice day. And that's a pretty good day. And that's a nice day from, close here to getting in here. Oh, Caterpillar has quite a few of these. But we don't base our expectations on having these types of days. We don't set our emotional expectations on that, because then that get things out of whack, and we have to take the bread and butters and the boring trades along with the nice trades like this, right? So we go back to Caterpillar performance, and you can see here. I think what do we do here? Yeah, it's fine. So this is all taken in a row. Then we put it here on a nice spreadsheet. You can see here the trades. Here's a quick view snapshot. I don't know, maybe that looks messy for a lot of people, it seems. And you can, it's IBM. Let's go to Caterpillar. Yeah, here's Caterpillar. Oh yeah, we rounded this one, rounded these down to incorporate any sort of slippage concept. We usually don't do that, but we did here. And you can see here, it gives you a very good picture. From January 1st, 2023 to April 6th. So January, February, March, 3 months and a couple days, right? So on Caterpillar, I don't know if you're familiar with Caterpillar stock, we had 180 profit points. That's ridiculous, okay? Ridiculously good for Caterpillar. That's a lot of points for boring old Caterpillar. And so you can see the progression here on the spreadsheets where you have the running totals. That means we sum all the trades one by one. And you can see the progression. Did we make a chart? We didn't make one of those spreadsheet charts. Show you a little graph. You can get a picture of the growing account. All right. And you can also get a picture of the progression of trades. What you want to do is you want to get the perspective of winning streaks and losing the streaks, and losing versus winning times, and what happens. Okay, so let's say you had a scenario where you had a couple or a few losses. Then what happens shortly after in terms of gains? Okay, pretty good. Here's another cycle, and then we had some good gains. And so we look to take all the trades in order to first pay for our costs, right? Because we want to make sure we capture the profitable trades. We have to cover our cost of doing business, which is, no, it's not your internet connection, it's not commissions. Well, a little bit, right? But it's the losing trades. That's the real cost, right, in your trading business. So we have to make the sales. We have to make the positive revenue to cover the cost and then progress past the cost into profit. And we do the series of deals. This produces the consistency, or good system performance and all that. When one is trading a system, when one is operating a business, you have to keep going. You do all the deals. All right, so because we have a one-day trade, we trade these very short-term, moderately in the money, weekly options. We pick the option that seems most fitting in terms of price versus any whatever premiums left versus the delta. And therefore, within one day, you're not going to have a lot of premium decay. But as we get towards the last day or two, of course, you have your most premium decay, or you have the fastest premium decay rates, but you're also going to have a lot of premium decay that already happened on the options. So then you're going to have some cheap options. You're going to have some in-the-money options that has very little premium and very high deltas. So you're ready. As soon as you start going profitable, you're already in the 80 deltas, going quickly to 90 and 100 on your deltas. All right, so if you like vanilla options, you're looking for a way to trade. You're looking to try something out. You're looking to do something for fun. You have some play money you want to put to work, right? Why don't you just try OMNIPOPS, sign up, watch the trades go by, and you can get a feel and a picture for it, or just, put on, want to trade, and just put on the trade, as we go by. Just understand that with trading signals, there are two approaches to take. One is to go with the original intent, which is, for our original intent is we're running a system. So we look to take all the trades in a row. That's what a system does. Now, if you have some good skills, you may just want to take these trading signals as trading ideas. And you may know, as we do most of the time as well, what trades will likely do better than others. So if you have those other skills and you have the experience, you can get the good trading ideas and trade those, and skip the ones that are going to be mediocre. So you can take it that way. All right, so that's it. I just wanted to go over Caterpillar performance a bit more here, and just talk about what is involved with OMNIPOPS and present potential money-making opportunities. Now, also speaking of money-making opportunities, we have trading systems. A lot of folks will do better with a trading system, learning and mastering a trading system, and putting it to work themselves over time. Plus, you don't have to depend on a signal caller. You can be your own signal caller, right? So that's it's pretty smart, right? So we have those on Options Trading Authority, Options Weekly Paychecks, that will deal with the short-term cheap options, right? And you can put those to work and potentially make a lot of money. Okay, that's it. Thanks.